XRP has had an incredible year. The SEC lawsuit settled. Spot ETFs launched with nearly $1.5 billion in inflows. Japan's biggest banks partnering with Ripple. RLUSD hitting $1.2 billion market cap. So why is the price down 48% from its all-time high? And by the end of this video, you'll understand the four forces creating this divergence and what actually needs to happen for XRP to break out. Chapter 1, The Good News Mountain. Let's start with the wins, because there are a lot of them. First, the SEC case. After nearly 5 years, Ripple and the SEC dismissed their appeals. Judge Torres's 2023 ruling stands: retail XRP sales are not securities. Ripple pays $125 million. The legal cloud is gone for good. Second, the ETFs. 7 spot XRP ETFs are now trading in the United States. Cumulative inflows have reached $1.47 billion. 8 straight weeks of positive flows. Major institutions are among the disclosed holders. This is real institutional demand. Third, Japan. Ripple has partnered with Mizuho Bank, SMBC Nikko, and Securitize Japan. RLUSD was approved by Japanese regulators and launched through SBI VC Trade. This is not a press release partnership, this is live, regulated financial infrastructure. Fourth, RLUSD itself. Ripple's stablecoin has hit $1.26 billion market cap in under a year. For the first time, more RLUSD circulates on the XRP ledger than on Ethereum, signaling capital rotation back to Ripple's native ecosystem. And Standard Chartered's crypto research team recently predicted XRP could hit $8 by the end of 2026, and $28 by 2030. Here's the thing though, all of that is priced in. And then some. Chapter 2, The Price Reality. Despite all this good news, XRP is trading at $1.04 as of today, June 30th. That's down 48% from its July 2025 all-time high of $3.65. It's down over 70% from its true all-time high of $3.84 back in 2018. Let me put that in perspective. If you bought XRP at the peak, you're down nearly 50% despite the company winning its existential legal battle, getting ETFs approved, and signing up Japanese banks. The technical picture backs up the pain. RSI is at 33, that's oversold territory. Price is below both the 20-day and 50-day moving averages. The MACD is negative. And we're seeing a Bollinger Band squeeze. The most confusing part? ETF inflows are still positive. Institutions are buying. But the price keeps dropping. This is the classic divergence: smart money buying, retail selling. So what's causing the sell pressure when everything looks bullish? Chapter 3, Macro Headwinds. The first answer is macro. Bitcoin has fallen below $60,000. When the market leader drops, everything drops with it. Crypto correlation is still above 0.8. The Federal Reserve's interest rate policy is still restrictive. Risk assets globally are under pressure. When the risk-free rate is 4.5%, speculative assets need to offer a compelling premium. Right now, the market is saying, I'm not sure XRP does. There's also been a broader crypto market downturn. Total market cap has shrunk. Meme coin mania has faded. The macro environment doesn't care about your thesis. It cares about liquidity, rates, and risk appetite. All three are headwinds right now. Chapter 4, The Token Utility Gap. Here's the uncomfortable truth that doesn't get enough airtime. Ripple has over 300 partners, banks, payment providers, financial institutions. But not all of them actually use the XRP token. Many use Ripple's technology without settling in XRP. That's the bank partner utility gap. Then there's RLUSD. Ripple's own stablecoin now has a $1.2 billion market cap. It's designed for exactly the same cross-border payments use case that XRP was supposed to own. Does Ripple need XRP anymore, or is RLUSD the real product? The XRP Ledger co-founder David Schwartz recently proposed a front-running fix for the protocol. That's the kind of technical debt that matters for institutional adoption. The bulls say RLUSD drives more volume to XRP because it settles on the XRPL. The bears say it cannibalizes XRP's core use case. The market is clearly pricing in the bear case right now. Chapter 5, What comes next? So where does XRP go from here? 3 forces. Force 1, technical. RSI at 33 is oversold. Bollinger Bands are squeezing. Historically, this has produced a 20 to 40% bounce within 2 weeks. Force 2, fundamentals. $1.47 billion in ETF inflows. Japan partnerships going live. RLUSD reaching critical mass. These are real adoption metrics. Force 3, macro. This is the biggest variable. If the Fed cuts rates, crypto liquidity returns. If rates stay high, the headwinds continue. Standard Chartered sees $8 by end of 2026. The bears see a retest of 80 cents if macro gets worse. The gap between those outcomes is the widest it's been all year. Conclusion. Here's the bottom line. XRP is in a battle between narrative and price. The narrative has never been better: legal clarity, ETFs, Japanese banks, a growing stablecoin ecosystem. But the price tells a completely different story. These two realities will eventually converge. The question is which direction. If institutional adoption continues, if the macro environment improves, and if the token utility gap starts closing, the bull case is still very much alive.